Good morning, good evening, good afternoon, depending on what time of day it is you're watching this. We're going to go through right now and do a virtual crop insurance kind of an update meeting for anybody that would like to listen. So with that, we are going to get started. Farm Credit made a few changes this year with our vision and our mission statement. Basically did some updating to it. It hadn't been updated in a while. Now, as a vision, we're wanting, and we tried to set our goals high here, to be an invaluable partner and a trusted advisor. We want to be there to assist you. And then the mission following that would be to support aspirations and vitality of agriculture and rural communities. We want to be a partner with all of you as far as that goes. Goals, we want to be there for the long haul. Now, Farm Credit Services in North Dakota offers a variety of different products basically out there to meet your agricultural needs. Operating loans, real estate machinery loans, young and beginning farmers, crop insurance for that risk management, online banking, and a customer portal. These are just a few of the things that we offer here at Farm Credit Services in North Dakota. Now, new for 2021 is our cash dividends. This is basically given out for loan customers. And what we're doing as a co-op is we have the ability to share with you some of our financial strengths. This is not going to affect our low rates. Cash dividend is a way to get cash back to basically our customers and our co-op owners. So what we're planning on doing is paying out 100% based on your average daily balance on the loan side of things. So this will be paid out as far as your average daily balance for the year on what you're running on a loan, and we will be paying a cash dividend basically the end of March. So this is very exciting. If you have any questions on this, please talk to one of our lending staff and they'd be happy to help you out with that. Now, with that, we're going to get started on the crop insurance and some farm bill things. What we're doing is we're trying to give you the best information we can. Now, some of this information does change. So this is kind of our cover your butt type of a thing. This basically means if I screw something up, we can't be held liable. We're trying to give you the best information we can at the time, and we'll just move forward from there. Now, Farm Bill update, we've had a lot of government programs that have come into play in the last 3 years. If you think 2019 all the way going through now 2021, we had a PP top-up payment that came out in 2019. That was just basically a little extra money that went on prevent plant claims. PLC ARC payments, those have been here since 2014 Farm Bill. We do have a sign up that's coming up on that PLC ARC, and that is March 15th. We're signing up for the 2021 PLC ARC. Also, we've had MFP1 and MFP2. We've got WIP Plus out there, and we've had some payments that have been made on the WIP Plus program. Now, also be aware we've got a new QLA, they call it. It's a Quality Loss Adjustment Program. The sign up for that is March 5th. That is not that far away. So if you have not signed up for the Quality Loss Adjustment Program at FSA, please do that. What is the Quality Loss Adjustment Program? That is basically getting some money back on some crops that have had some quality issues where we've lost basically some income because our wheat, our corn, or soybeans, whatever crop it happened to be, did not meet the quality specs. So we got a price reduction at the elevator. Please get in and make sure you sign up for that one. That goes under the WIP Plus payment. Now, COVID-1 and COVID-2 have came out, and then there has been some talk about maybe a third relief package. We'll have to wait and see on that one, but that one might be coming through as well. Now with that, we're going to do a little talk on the ARC PLC. What I've got here are the 2020 numbers. This is what would potentially get paid out this coming October. Now remember, we are signing up for 2021, which means we're going to be making some guesses on what some markets are going to do. And that's going to be a very difficult decision because we're not really certain what markets are going to do. So let's take a look and see what they've done over the last 3 months. Now, what we have here is a reference price. That's the column on the left. Just to the right of that, the middle column is your 2020 market year average. And then the column on the far right is the PLC payment. This is what PLC is paying as of December. Now I have some updated numbers too that I'd like to show you. But as you can see, for instance, wheat 550 reference price minus the 2020 market year average of 470, that would give us an 80-cent payment. Now, some of these numbers have changed pretty drastically. Why? The market year average has increased quite substantially over the last couple months. This is that January number. And remember, we're looking at about an 80-cent payment in December. That dropped all the way down to 65 cents. Now, look what's happened in February. That price has got even lower. Why? Commodity prices have climbed a little bit, and we've also seen that market year average rise. With a higher market year average, that decreases our potential PLC payment. But as you can see right now, wheat, barley, canola, lentils, dry peas, sunflowers, flax, chickpeas, small and large, are both looking at somewhat of a payment on the PLC program. This is probably not as big a payment as was there in 2019, which you got the fall of 2020. But there is some money there potentially. Now you can see oats, corn, and soybeans, probably not going to see a PLC payment this October. So be aware of that. Now, moving on, when is that market year average set? That market year average is basically set at different points in times depending on the commodity you're looking at. Wheat, barley, and oats, June 1 to May 31st. Corn, soybeans, that's September 1 to August 31st. Dry peas, lentils, canola, July 1 to June 30th. The small and large chickpeas and sunflowers, along with mustard, safflower, and cranberry, are all September 1 to August 31st. And then there's that flaxseed, July 1 to June 30th. Now, the tough thing we're going to be looking at is we're going to have to try to make a decision for 2021 while we have not even completely set the 2020 market year average, because we are still trying to finish those prices off right now. And that means it's going to be a little bit tougher decision. So let's take a look at a few counties. What we've got right here is Burke County on barley. This is how ARC works and PLC works. So we're going to take a quick look at these. Now, the first thing we need to know is that Olympic average yield. That's the 60.49. And that is basically looking at 5 years prior, not counting the initial year because that's a lag year. We get rid of the biggest county yield, and we also have to get rid of the smallest county yield. We will then average the three middle numbers out. So 60.49 is the Burke County barley number. That number will change from one county to the next because the county yield changes. We're going to multiply that by, this is where we get that $5.07. Now what this is a national market year average. That $5.07 is the same for every county in the United States. For barley, 507. So I multiply my county yield, different for every county, multiply it by the national market year average, 507. That gets me to $306.68. Now I'm going to take 10% of that number, and that's the ARC max payment, and that's the $30.67. So that's the maximum amount you could get paid. Next step, multiply it by 86%. This would be taking into account that 14% deductible. Now that's where I get a $264 about, kind of like a county guarantee. So here's the tough part. We got to try to make a guess on what Burke County barley is going to run. I do not know what Burke County barley ran, so I put in a 55. That is a complete guess. I take that times 470. That's where the market year average is running right now, and that would get me to a 259. Now, if I subtract those two, I get $5. So that would kind of be an estimate. That's how this program works. Do note that the break even right now is about 56 bushels. If Burke County runs below 56, we see payments. At 56 or above, we're not going to see any payments. So that's kind of the number. Not sure where Burke County is going to run, but that's kind of how ARC is going to work. Now, looking at PLC, you could take $4.95. That would be the reference price. Subtract from it the $4.70. That is where the market year average is running at right now. So that's where I got the 25 cents. Now, what do I multiply that by? I'm going to multiply that by 50, and that 50 happens to be this farm's FSA yield. So it's in your FSA farm yield, not crop insurance, not anything else. It's your FSA farm yield. So this farm happens to have a 50 bushel yield. Multiply that by 25 cents, and that's how we'd have got a $12.50 payment. Now remember, you get paid both of these programs on 85% of your base acres. So that is kind of how that one's going to work. Barley, a little bit of a tough decision there, but it's, I mean, at least there is a payment on the PLC side. We're not sure what ARC is going to do. Next one, canola. Canola, again, Olympic yield is 1971.31. Take that times the little over 20 cents and we get that county guarantee of 342. Now, I don't know what Burke County canola ran, but we're just putting a number in at that 1,700 pounds. Take that times that little 17.25 cents, gets 293. That'd have been a $48 payment. But remember, this has a max. So the max would be the 39.72. But also, remember, PLC for canola has been a very good payer. It has paid out for most years. So that 2015, that's the reference price. Subtract from it where the market year average is at, and that's where you get 2.9 cents. Take that times your farm yield. That's your FSA farm yield. And we're using 1,700 pounds on this one. And that's where you get 49.30. It looks like canola could still pay on the PLC side of it. We shall see. It's been a good PLC crop and looks like it'll continue to be at least for 2020. We'll see what happens in 2021. Now, soybeans is a tough one. The reason being is you take Olympic County yields times Olympic price, we get that 216. And then you look at it, and we've got a market year average right now running at $11.15. It's hard to squeeze money out of this when we're so much higher on the market year average. 11.15 is a lot higher than the 9.25. And look at that break even number of 19 bushels. That's a tough one. Now, if you look at the reference price at 8.40, you compare that to 11.15, no PLC payment either. This is kind of a tough one, so I'm not sure where this should go or where it's at. You might want to split acres. You can go sign up at PLC and maybe look at buying an SCO product. But remember, the SCO product has premium on it. And we will talk about that one later as well. Now, looking at wheat base. Wheat has got a county yield of 44.40. Take that times that Olympic price of 5.50, and that 210 comes into play. Well, what happens if we run 44 bushels? That times $5 is 220. That would not be a payment. Where's the break even for ARC in Wheat County or in Burke County? 42 bushels. Okay. Now also look at the PLC. Remember, wheat still is a payer on the PLC side of things. The 550 minus the $5 market year average, that would be a 50-cent payment. So we're looking at about $25 if we would have had a 50 bushel farm yield at FSA. So that's kind of how those work. Wheat is a tough one, guys. I'm not sure where it's going to go. When it was a little bit cheaper in price, when that market year average was lower, I thought we'd go PLC. Now you could go PLC by SCO if you want to, but remember, SCO is premium. And then you can also look at splitting farms. Don't be afraid to split your farms. Now, if you split your farms, higher yielding farms, your higher yielding FSA farms should be your PLC farms. Your lower yielding farms will go ARC County because all of the payments are based off of county information for ARC County. PLC, the higher your farm yield is, the more you can get paid. So don't forget about that side of it. Okay, now looking at barley in Divide County, that break even at 56, and we're still looking at about a 25-cent payment on the PLC side of things, which is not a bad thing. Okay, canola looks like a good PLC crop as of right now, but that number has come up too. So if we're afraid of losing some money, remember you can still go PLC or split, but for canola, I would probably go PLC still. Corn, tough one, very difficult. That break even at 77. The problem is we've got a higher market year average at $4.30. You compare that to a 370 market year or Olympic price. it's hard to start triggering ARC County payments on corn. The problem is PLC is not triggering a payment either, and that makes it extremely difficult and hard to decide where you want to go. So I'm not sure on corn. Corn could be split if you'd like to. Now, if you're worried about a county drought, you can go ARC. If you're worried the prices drop more, you can go PLC. Or if you just want to say, you know what, let's split them up. I'll get half of the money. I might miss half of the money. Don't be afraid to do that either. Now, soybeans, again, tough. We haven't ever seen a PLC payment on beans, but right now our county doesn't look like it's going to pay either at a 14 bushel break even. So that's a tough one. If you're worried about drought, like I said, go ARC. If you think the price can go below 840, you could go PLC, but soybeans have never paid PLC. So you probably go ARC unless you want to buy the SCO product. Then you could go PLC. Last one, again, wheat, same thing in Divide County, break even at 34. It's going to be hard to trigger that. The problem is that market year average is going up. So it's going to be a tough decision on your wheat base. Do you split it? If you're worried about drought and county yields, you go ARC. If you think the price is going to drop back down, you go PLC. You can still split them if you'd like. Those are kind of the options there. And Williams is very similar to what we were looking at in Divide. Barley at a break even of 55. Our PLC is still in the money a little bit at 25 cents as of right now. Canola appears like it's going to have a decent payment again on the PLC side of it. Corn, tough one. Hard to get below 111 on the irrigated practice. Remember, this is irrigated corn here for Williams County. Soybeans, again, getting below 13 is going to be tough, but the PLC has never paid on soybeans, so that's tough unless you're going to buy SCO. And wheat, don't be afraid of splitting that up either. So with that kind of covers some of the farm bill stuff. If you have questions, make certain you visit with one of our insurance specialists. They'll kind of help you out on that side of things. We're going to now move on to some crop insurance information and try to get through that side of things and see what we can do. So important dates on crop insurance. Sales closing dates coming up right around the corner on March 15th. Don't forget to get in there and get signed up for your 2021 crop year. Look at levels, look at options, those types of things. Also be aware of your early, that initial plant date, and your final plant dates. Those are different crop by county, so make sure you're aware of those. Production reporting. If you haven't turned your production in yet, get it done because we want that production in so we can quote your policy properly. Acres reporting still the same, July 15th, and then premium due date is August 15th. Don't forget about that. We've extended that date the last couple of years, but I don't know if that'll happen this year or not. Just be aware of an August 15th. It's due by September 30th. Interest starts October 1. So make certain you're ready there. Production reporting. Get that taken care of, get it done, and don't forget to label where that production is. If 100% of your production is sold, listed as production sold. If it's been measured by an AIP, you can put farm stored, measured by an adjuster. Now, if you're using truckload logs or grain cart weight slips or something like that, put field harvest records down. However you figured out how much production you have, that's what we should put on the production report. So just make sure we have that listed on there as well. Now, also make sure you keep good records. Report by optional unit or section. Make certain we do that because if we want to go back to optional units, we have to have production to report it. Now, it is important that we keep good production records. We could end up with assigned yields if we don't have the information to support what we put on a production report. So basically what we're looking at is, let's say I report 10,000 bushels. I end up in an audit and they find 11,000 bushels. I underreported, things are going to be okay there, correct it, we'll keep going, no assigned yields. The next one I report 10,000 bushels, we find 9,600 in an audit. I'm with 5% and I've got good records to support, we correct it and we move on. Now in the third one, we could have some scary situations. I report 10,000 bushels. We find 9,000. I'm off by 10%. So I'm not within that 5% tolerance. If I don't have good records, I end up getting assigned yields. It's very crucial to have good production records. Make sure you have them. Nobody wants an assigned yield. Assigned yield is 75% of your approved yield. So be aware of that. Livestock feeding records. Anybody who happens to have livestock, make certain before you start feeding, you'll let us know. We'll have an adjuster come out and measure your production, and then everything is taken care of. It's in good shape. Beginning farmer rancher, this is a great way to help reduce some of your premium. If you've got less than 5 years farming experience, or if you were under 18 and now you're graduated from high school and you're moving on and you're starting to farm, we can get this to work for you. Just be aware, talk to one of our specialists, they'll help take care of you. Veteran farmer, if you just got out of the military, the armed forces, let us know. We can deal with, or get you some of the same discounts there. So a veteran farmer rancher, there's another thing. Okay, moving on now, some things we got to be aware of. Native sod, anybody breaking ground out that has not been broke out in the past, let us know. Now, I will say this, anytime you're breaking any new ground out, let us know right away so we can help you out and get things set up. Also, please let us know if you're making changes to your farming operation. You've added land. You're going through and you're breaking up a pasture. You're breaking up some alfalfa ground. Those types of things, some CRP ground. Let us know so we can get things lined up. Any change to your operation, even if that means you're adding a different crop that you haven't planted in the past, let us know. Conservation compliance, just be aware, you need to have that 1026 on file with FSA. That's important. It will affect your crop insurance and those things. Now, subsidies are a big thing that you want to take a look at. Enterprise units are fairly heavily subsidized. This would be your discount. It's kind of like your premium discount. Because you're taking on more risk, RMA is willing to give you a discount in your premium. So as you can see, if I buy a 7100 on an optional unit, my discount basically is 41%. It's 59% subsidized. But if I go to an enterprise unit, that 80%. So that's where the enterprise gives you a little bit of a discount. Just be aware of that, and we'll quote that and take a look at it for you. RMA prices. This was where we're running at as of today. And today is February 15th. That is the day I've made this video. So that's where they're running at right now. Spring wheat at $6.46. This is up a lot from where we've been. The durum at $6.71. Canola's at 20 cents. Corn $4.51. Oil sunflowers at $21.40. Confections are at $26.50, that 0.2650. Soybeans at $11.66, and barley's at $4.13 right now. Now, that middle column is your volatility factor. This does affect premium, because if we're dealing with volatile markets, your premium will go up somewhat. Notice the middle column is much higher than the column to the right. So for spring wheat, that 0.19, you compare that to a 0.14. 0.14 was the 2020 volatility factor. 0.19 is the 2021 volatility factor. So as you can see, that middle column is substantially higher than the column on the right, which means our premium is going to be a little higher than what it was in 2020. Now, price is also going to drive premium up, but that also means my coverage is going to be higher. So expect some higher premiums in 2021. Here's our established prices. Oats at $2.45, sugar beets at 0.146, flax at $10, safflowers at 22 cents. Now remember, I said our prices were substantially higher than what they've been in the past. And as you can see, going back to 2017, we have for most crops a much higher spring price, that projected price, than what we've had in prior years. So that's a good thing. The coverage is going to be a little higher. Take a look at levels, take a look at options. Now, revenue price, sometimes people ask, where's the price coming from? And all of these prices basically come from a board or something like that. So if you look at peas and beans, they come kind of off of a local market. They collect data from some local elevators, things like that, and they pull a price. Barley comes off Chicago Board of Trade based off of corn. Wheat comes off of the Minneapolis Grain Exchange. Sunflowers, again, coming off Chicago Board of Trade based off of soybean oil. Canola is coming off of ICE, that Canadian board. Soybeans are coming off Chicago Board of Trade, and so is corn. So that's kind of where they pull these prices. Now, the next thing we're going to talk about here is options. Do not be afraid of looking at options. Options are a great way to try to increase your dollar per acre of coverage, and then looking at levels and things like that to try to control the premium. See if we can get a higher dollar amount of coverage and pay a little bit less on premium. First one we're going to talk about is the quality loss option. This is new for 2021. What does this do? This basically allows you to, if I had a year where I had quality issues and crop insurance reduced my bushels down, I can put back in what I actually grew. So if you had falling numbers one year, or if we had low test weight, something like that, that can work. So let's take a look. Here's kind of how it works. Look at 2019. I produced 50 bushel wheat, but I had a claim and I had some quality issues in 2019, and crop insurance reduced my production down to 25 bushels. So that's kind of how this works. What is it going to do? My yield, regular yield would have been 43 bushels, but by using the quality loss option, I can actually get a 46 bushel yield. So that's what we're doing. We're trying to increase our bushel per acre. And the tough part about it is it does cost some money. So you want to take a look at this and quote it out. It seems to work a little better for optional units than it does for, seems to work a little better for enterprise units than it does for optional units. Yield exclusion, this basically means if the county had a bad yield for a crop, for one crop year, you could potentially take that yield out of your database. So the county was bad, we had drought one year or something like that, you can take that yield and move it out of your database like it didn't exist. Trend adjusted, this is a great way to kind of increase your APH. This will allow you to basically add a little bit on each year. The older the year, the more you can add. Why is trend adjustment there? Well, our farming practices have changed drastically in the last 20 years. We've done a lot of things different. Genetics are better. Farming practices have changed. We're using more or different fertilizers, sprays, those types of things, and we can, in general, grow more bushels than we could have 20 years ago. And that's what trend does. It kind of gets your APH closer to what you're doing now. Yield floors is a great way to use a T yield and basically get a percentage of it. It's for barley and wheat, we can buy 90 or 100. For the rest of them, it's an 80% number. Cups are basically a way to keep your database from falling too much in one crop year. So that's what a cup does. It limits how much your APH could drop in 1 year if you would like to put that option on. Do not be afraid of looking at options. Not all options are good options, so you want to take a look at them. Insurance specialists will be glad to help you out and do some quoting on those, and they'll take a look and see what best fits your operation. Third-party damage. This could be spray drift. Neighbors' cows getting out and getting into your field. What does it allow you to do? It allows you to take the acres that are damaged and remove them out of the database so they don't hurt your APH. Do note you still have to pay premium on the damaged acres, and crop insurance does not cover unavoidable third-party damage. Like I said, spray drift, cattle coming through, those types of things, or a fire, something like that could potentially be an unavoidable third-party damage. Let us know if something like this happens and we'll let you know what we can do for you, but just be aware of those things. Multi-county, this was a great way to get an enterprise unit discount in a county you maybe only have one section. So I farm right by the county line. My main farm is in one county, but I have a section in another. I've never been able to get the discount in the past, but starting last year, we allowed a multi-county. How does this work? Well, here's what it does. So top left corner, I have two sections where I planted at least 20 acres in both sections. And note, you've got to have planted acres and at least for the most part, 20 acres in each section. So I've got my green canola. My county on the left qualifies on its own as an enterprise unit. My county on the right does not qualify as an enterprise unit. What I can do is I can bring those two counties together and bring those three sections together and get one big enterprise unit. But remember, that means the county on the left and the county on the right become one. If one county runs good it could take you out of a loss in the other county because that production goes together. Now let's look at the upper right corner. This one does not qualify for multi-county. Why? I have one section of canola on the left county, one section of canola on the right county. Neither one qualified by itself, so that doesn't work. Soybeans, one on the left, one on the right. That doesn't work. And for wheat, you just had one on the left. So that means basically that none of these can be multi-county together. And then if you look at the bottom middle, this is where I got two canolas on the left and at least 20 acres in both planted. And I got two sections of canola on the right with at least 20 acres planted. This is not going to be a multi-county. This would be the county on the left is one enterprise unit by itself. County on the right, one enterprise unit by itself. So that's kind of how multi-county works for you. Now let's take a look at some of the changes that have happened for 2021. Basically, what has happened for buckwheat here? No type specified got changed to spring. Our insurance specialist will take care of that for you. The other thing is there was a couple counties that got added in the green in Montana and North Dakota. So those counties now have buckwheat insurable. Camelina, again, this one had some minor changes. Summer fallow continuous cropping got changed just to a non-irrigated type. So that's kind of where that has happened on those. Soybeans, we did add soybeans to insurable for McKenzie County with a T yield of 19 bushels. Now, on the Montana side of things, we also added Richland County with a T yield of 15 bushels. So soybeans are now insurable in McKenzie and Richland counties. Next one, non-irrigated grain corn got added, and this got added to Billings and Williams County. So those two got added. Williams County has a 74 bushel T yield, and Billings County has a 75 bushel T yield. All right, flax went from no type specified to spring in the state of North Dakota. Don't worry, our insurance specialist will take care of that one. They've added spring high oleic acid as a canola type. So if you're planting something that you might think fits into this category, let us know. We'll see what we can get done there. Now, this one we've added basically a contract price to mustard in that very northwest kind of corner and southwest corner, plus a little bit in the north central there. So if you happen to have some mustard, talk to your insurance specialist, see if you can do some things there. Rate and T yield changes. Each one of these has had a rate change, and rate changes can mean rate goes up, or in some cases it can even go down. T yield, those did change for all of these crops, and many of them did go up, but we've had a handful that have gone down as well. So take a look at those, know your T yields. Your insurance specialist will help you out with that. Cat coverage, something to be aware of here. This changed last year. The fee for cat went from $300 to $655. What does this mean? If you still have a cat policy, you may want to look at going and buying an APH plan or a yield plan and buying a lower level. It might be cheaper than what the cat policy is. Malt barley. There has been some changes to malt barley in 2021. There's still 3 ways to insure malt barley. One of them is just with a regular RP policy, taking the board price, basically the crop insurance prices. Option number 2 is buying a yield plan. Now on this one, you're going to buy a yield plan, but you can utilize your contract price to get a little bit more dollars of coverage. But note then, all you're doing is protecting bushels. There's no price swing or any of that. So it's a yield plan utilizing your contract price. And the third way we can insure these is with the malt barley endorsement. Now the malt barley endorsement still utilizes your contract price, and it does have some revenue to it because we have a spring and a harvest price set there. Now, in the past, we used to reduce bushels using basically the crop insurance numbers. They made a revision to this one, and it's been a pretty good revision. It's now utilizing a local market price. So this allows us to potentially reduce your bushels more. So here's kind of a quick example of how this thing works. In 2020, what we'd have done is we had 1,000 bushels and we got rejected by the buyer. So all of the bushels were rejected. What did we do? We used the 266, which was the crop insurance price, and we divided by what would have been the malt barley endorsement harvest price to reduce the bushels down. And then it reduced them down to 591 bushels. That's what would have been taken as production to count then. Now, in 2021, we'll do this slightly different. We're going to use the local market price, which is $2.15. That's what the market would be for the barley you're selling. Divide that by the 450, the harvest price for the endorsement, and we can reduce it down to 477. That's a big change. Now, the other change is that 477 does go into your APH, so that will be utilized in your 10-year history. Be aware of that. Whole farm. Whole farm is a way to kind of put all of your products together, and this is covering revenue based off of tax information. So you have to turn all of your tax information to get this to work, but not a bad policy just right now. Maybe not working out real well because of our tax numbers from the previous 5 years might not be as high as what the projected prices are. So most people are going to probably look at regular crop insurance. Now, with that, that was whole farm. Next thing we're going to talk about is supplemental coverage option. Now, SCO, this is an area-based plan and it's a county-based plan. It pays out on county-based numbers. So it's off of a county yield is kind of how this thing's going to work. The subsidy on it is 65%. So a quick look on this. I've bought an individual policy at a 75% level. That orange bar is going to cover my bushels. What does SCO do? It always covers down from 86 down to whatever level of coverage you are going to be at. So I've got 11% coverage on a county-based plan. And do note that this is based off of county yields, not your individual information. But it kind of mirrors ARC, and with higher prices, it's at least, I guess, worth looking at. Now, the premium isn't super cheap on these either, so you want to quote it out and take a look at it. But like I said, it's from 86 down to yours, and then premium is due on this in September, just like regular crop insurance. So premium due in September. When would you see a potential payment? You don't get paid on this until probably maybe May or June of the following year. So if you buy an SCO product in 2021, you'll have coverage for the 2021 crop year. Your premium would be due in September of 2021, and you will not know if you're going to get paid until probably May or June of 2022. And do note that this is based off of county bushels, not your personal farm bushels, but a nice way to get maybe a little top end covered. ECO, this is very similar to SCO. Again, this is a county-based plan. And actually, I should go back to SCO quick. Do note, if you buy ARC with SCO, or if you bought elected ARC at FSA, you cannot buy SCO. SCO can only be put on PLC crops. So be aware of that as well. Okay, ECO is a little bit different though. ECO, you can have ARC or PLC at FSA and you can still buy ECO. SCO only works on PLC crops. ECO works on ARC or PLC crops, all right? So that's a good thing. The bad thing is the subsidy is a lot less. It's only 44% subsidized, so your discount is not very good. What does that mean? For a county-based plan, this is a fairly expensive product. Why? Because it has a much smaller deductible. You're looking at a 5% deductible or a 10% deductible, depending on what you buy. Now, I would suggest if you buy this product to buy the 95, and if you don't like the premium, buy less than 100% of the price. You want to put your trigger as high as you can. So that's kind of ECO. Same type of thing. Premium is due in September, and payments don't come out until May or June of the following year. But again, this is some top end coverage, and that's kind of how it works at a county-based level. Your farm yields do not matter as far as payments go for ECO or SCO. So be aware of that. Almost all crops we deal with are available for the ECO coverage. So brand new for 2021, and pretty much every crop we deal with could have ECO on it. All right, moving on. Winter wheat. If you've planted any winter wheat, please let us know. We've got some work to do. So give us that data right away in March so we can get it filled out and taken care of. If you planted winter wheat, let us know. Prevent plant. Not a lot of changes for us here. The 1 in 4 rule did go national, so everybody has the 1 in 4 rule on the planting. Has to have been planted, harvested, and insured in one of the previous 4 years. Otherwise, it runs out of eligibility. Once you run out of eligibility, you have to plant it, harvest it, and insure it 2 years in a row. So be aware of that. Now, new for 2021. Basically, this is giving you as a producer a little bit more flexibility. All right. You can get paid on a crop different than what you plant in the field if you can support that that was your intention. So what I would be saying here is, let's say I planned on planting, we'll say corn, and it was wet. I couldn't get out there, and then I end up planting soybeans later. I could claim PP corn, but you are going to have some work to do to prove that you intentions were to plant that if you don't have 2 crop history on that field. Also new is if you're a new producer and you're filling out an intended acreage report, you can do an intended acreage report in the first year, and you can basically revise that intended acreage report in the second year. That's if you don't have any planting history in that county. So just be aware of that one. And the last part here is drought. Drought is no longer considered planted, harvested, insured if you had a cause of loss of drought. This works very similar to excess moisture, those types of things. So just be aware of your 4-year history. Make certain that you are getting things taken care of there. Now, corn will not be considered a cover crop for preventive planting purposes any longer. That's new for 2021. That's a different. Added land, anytime you're adding land, please let us know so we can help get databases taken care of, get fields added to your farm, to your operation. So we have that in company systems. And anytime you're also pulling CRP out or something like that, let us know. Now, replant, before you replant, please give us a call so we can help take care of that. There's some things we got to get lined up and taken care of. Just let us know so we can take care of it. New breaking. Again, I'm stressing anybody that's breaking any ground out or making a change to your farming operation, please let us know. Land emerging from CRP is the same type of thing. All right, hail. We will still be running hail and talking to you guys about it. And I realize that it is February and we're talking hail insurance, but keep that in the back of your mind. We've got a lot of options. There's deductibles. There's some very nice, very good companion policies that are out there. A lot of things that hail does a great job with. It includes fire and vandalism coverage. Those are some things that are nice that regular crop insurance doesn't cover. We will try to find the best fit for you. And there's a lot of different policy types. So we'll talk to you about those and see which one kind of can fit your needs. All right. Sales closing reminders, please let us know. Anybody adding new crops, anybody making changes to an operation, married, divorced, adding land, getting rid of land, breaking land out. These are all things that we want to know. Maybe you built a new LLC that we have to make a change to. Let us know and keep your ARC PLC March 15th deadline there. Don't forget about that one too at sales closing. It's running in the same time as crop insurance. Options. We do a few different things. There's some direct deposits you can do with AIPs. We can pay bills online through most AIP systems. And one thing too that a lot of AIPs, a lot of these companies are pushing would be the DocuSign. It's a way to get your electronic signature. The adjuster might not have to come back out to your farm to get a signature. So be aware of those. Acreage reporting reminders. The big thing I want to let you guys know is acreage reporting is still July 15th. As soon as you're done, get that acreage report to us. We can go and make sure everything looks right. If we find something that's kind of questionable, it's a lot easier to fix and figure out what's going on if we know early. If we bump up right to the deadline, it's difficult. So report early if possible. Claims reminders, just be aware of this. I don't want to see anybody not get paid that should have. Turn your claims in timely. Make sure you have good records to support what you're doing as well. Don't forget about the record keeping. There are deadlines. Production only losses supposed to be turned within 15 days of when you're done combining, or the calendar date for end of insurance, whichever comes first. So be aware of that. Anything after 15 to 60 days becomes a delayed notice. The claims adjuster will work, but it's not 100% certain it'll get paid. And after 61 days, it gets denied. So turn your claims in timely, please. And revenue works a little bit different. You get a little extra time if it's a revenue only loss, but needs to be turned in within 45 days. The big thing here is if you're close and you think you have a claim, let's get that thing turned in right away and get you taken care of. Now with that, this is Farm Credit Services in North Dakota. This would be our footprint, and the stars are where we have our branch offices. If you have any questions on the insurance side of things, stop into one of our local offices and visit with one of our crop insurance specialists. They'll kind of get things rolling for you and let you know what we can do. We've got a lot of different companies that can do a lot of good things, so we'll help take care of you on that thing. With that, I guess I'd just like to thank you all for your time. If you have any questions, please get a hold of one of our crop insurance specialists. We'll help take care of you on that side of things, and then we'll kind of go from there. So with that, thank you much. Appreciate everything, and let us know if we can do anything for you.